Hey, it's Kevin and Brian. We're back with you on Money Mondays, trying to help you understand some of the dynamics of lending and borrowing today. What I really wanted to focus on right now is how can you help customers understand what's the best mortgage rate for them?
That's actually a great question. And there are many factors that go into our counseling with your clients. What type of property are they buying? Are they buying an investment property, a second home for themselves and their family, or a primary residence? What's the price of the home? What's their down payment ability? Do they have a house they need to sell before they buy? There is, many different ways. Is your client a veteran of our armed services? Do they have the ability to have access to a VA loan? Are they a first-time home buyer, and do they need down payment assistance? So I call it a client interview. It's more than taking a loan application. We want to find out about their lives. We want to find out about their family. What needs do they have that need to be fit? And then we tailor make every situation for those clients. So literally, you could have somebody, this is something we've done a few times recently as well. So we've got somebody that does have a house to sell, but they do have the ability to purchase a home, qualify to purchase a home before their current house is put on the market. And they've got the ability to put down a minimum down payment, let's say 5%. So what happens is they want to put $100,000 down once their other house sells. So what they could actually do is we can help them buy now with a minimum down payment on a conventional loan. And then they can take, once their current house sells, they can take that big lump sum of equity, apply it towards the principal, and go through a very simple and inexpensive process called a recast. And that will drop their payment to be commensurate with what their new principal balance is based upon the rate and terms that they set the day of the closing when they bought their new home.
So that kind of leads me to the question of how much of a down payment should they bring?
Well, that's going to be a unique question for each client because a first-time home buyer can get a conventional loan with as little as 3% down. A veteran of our armed forces can actually get a loan with 0% down. If you put less than 20% down on a conventional loan, you're going to have PMI or private mortgage insurance. That is a temporary feature on a conventional loan. There is no PMI on a VA loan, and on FHA loan, if you put 10% more or down, if you need to go FHA, then the PMI falls off after 11 years worth of payments. But so the determination of how much they need to put down is really going to be based upon their current set of needs, because in some cases we've talked to clients and we've shown them how putting maybe if they have the ability to put 20% down, but they're carrying a decent amount of short-term debt, we can actually reduce their overall cash flow out on a monthly basis, sometimes by 4 figures a month, by just putting 10% down and using that other 10% for debt reduction. And it really helps their overall monthly budget, and it helps them maybe even to be able to buy a little bit more of a house. So we really help tailor make that answer for each and every individual client.
So besides the kind of the VA loans, are there any kind of other assistance programs out there?
Absolutely. There are national down payment assistance programs, and there are multiple entities within the state of Texas that offer down payment assistance. And you don't have to be a first-time home buyer to get access to the down payment assistance programs. If you qualify, then you qualify. And so if you would like to buy another home, or if you'd like to buy a home, and you don't have a lot of money saved up for a down payment, we immediately research all the options or the down payment assistance programs throughout the state of Texas, sometimes even within the city municipalities, to find out all of the benefits that we can offer to your home buyers.
That's great. What are some of the more popular mortgage programs that you all offer?
Conventional is the biggest and most popular. Anything that goes over the loan amount of $726,200 is considered a jumbo or a non-QM. By talking non-QM also, we can do bank statement loans. We can even help somebody get into a home by just providing, if they're self-employed and have been for a little while, by providing a copy of a profit and loss statement. But we do VA loans, which are for veterans, FHA loans if we need a little bit more flexible debt to income ratio or a little bit more flexible credit score qualifications. But there actually is one more zero down payment option that's not widely used. It's called a USDA rural housing loan. If you are willing to buy in an outlying area, not necessarily a suburban or urban setting, and you have income levels that are not above area median, in other words, the area averages, you may be eligible to look at homes that are qualified for USDA, and you may be able to qualify for a 0 down payment loan.
Wow, that's amazing. So yeah, so lots of vehicles out there, lots of options and programs that Bryan and his team at Cardinal can kind of bring to bear for you. So definitely something that we would be able to sit down, like you said, have an interview. It's not necessarily a black and white situation, right? You have to learn all the nuances and kind of dynamics that go into that conversation for Bryan and his team to identify, hey, here are the best options for you, right? So that brings to me kind of the question about, how do I get qualified for a mortgage? What are the steps, or maybe some tips and tricks there?
Great
right?
question.
Because I think you and I had a conversation recently, and there's a difference between things that happen credit-wise in your past, and then there's something called recency.
Mm-hmm.
See, I was paying attention, where things happen more recently, and each one impacts your credit scores differently. So help us understand, how people get qualified and anything they can do to kind of help that process.
Absolutely. Step number one is getting a full loan application. That's kind of like giving a baker all of the ingredients that they need to make that cake. Okay. So once we have the loan application in hand, along with that is getting a copy of your credit. We can do this a couple of different ways. We have the ability to do a soft credit pull, which does not immediately impact your client's credit scores. And we can render a pre-qualification on soft credit pulls, but we cannot offer an actual pre-approval or loan approval without having a hard credit pull. But we can delay that if need be. But by getting us involved in the overall loan application and credit review picture early on, it really helps us be able to paint an accurate picture as to what offerings are going to be available to that client, or what needs they may have in order to help them get into a house the most strategic way possible.
So when people are trying to figure out, what kind of house I can buy, what really kind of goes into that? How can they determine, what kind of house they can buy, what kind of money they need to kind of be aware of?
Okay. The terminology called debt to income ratio will come into play. The most conservative route possible is if you take all of the money that you make on a monthly basis before taxes are taken out, the gross income. So if someone has a base salary of $100,000, use all $100,000, multiply that by a factor of 43%. So in this case, it would be $43,000. Okay? Divide that by 12 months. And that's the monthly figure that you can use to qualify for a home. But you've got to back out other debts that will show on credit, whether it's student loans, car loans, credit cards, motorcycles, boats, RVs, anything that is a credit loan that will show up on your credit profile has to be deducted from that net 43% number of your debt to income ratio.
What about solar?
Solar would definitely, if there's an installment plan on solar panels, that definitely would come into play as well.
So as I've been working with clients, solar kind of takes a bunch of different forms. So that's definitely something you really want to be aware of when you're talking to Bryan and his team. Make sure that that's part of the conversation, because that could impact one way or the other. It may have no impact at all, but it may come up with kind of the debt to income ratio. So make sure you definitely bring that up as well.
Absolutely. And keep in mind, that's the most conservative route possible. So we help clients see a comfortable route to purchase with debt to income ratios over the 43% factor quite often. But if you're at home doing the math on the back of a napkin, that's the most conservative, most safe way to do the calculations on what you could qualify for.
Right. Yeah. So a good starting point before we can do some soft credit pulls and really start giving you a little bit better information on where you should be looking, right? Because you don't want to underlook, right, and spend a bunch of time looking for homes that you can actually get a bigger, better, real estate. You also don't want to be looking at really nice homes and all of a sudden realize, hey, financially, we need to kind of step down a little bit, because then it kind of obviously takes some of the romance and some of the excitement away from the actual process. So definitely spending time, right? Because I don't know that a lot of people really when you look at that process, when you put it in order, where does a conversation with your lender come in? I recommend do it as quickly as possible, right? Not that you're getting locked in, not that you necessarily even have to use them, right? There's lots of flexibility when it comes to real estate and realtors, when it comes to lending, right? But you at least want to start having conversations to understand, here's my expectations on a house and what we can afford credit-wise.
Many times when we do that, clients actually end up being able to afford comfortably, many times more than they thought they could. But sometimes also we do have to reel in expectations because they've got this vision of homes that they've seen online, but they don't have the idea of what the payment actually that corresponds with that. So again, being able to speak into that, give them the education, makes your buyers feel comfortable every step of the way with what they can do and what they want to do.
Yeah. Awesome. Well, that's it for today. You've got Kevin Hunter with Hunter Realty Group, your North Texas home hunter, and Bryan Connatser with Cardinal Lending. These guys are amazing. I've known him a long time. He's taken care of a lot of people and really helped them out. So definitely look us up and see how we can help you and make this experience as stress-free as possible. Thank you.
Thank you.